Right, so I finally decided to go ahead and add some really, in my eyes, undervalued Google stock to my portfolio. So I thought, hey, I just go into my stockbroker of choice, pop over there, type Google, and start buying some of the shares. Well, unfortunately, when you type Google into your broker, you'll be faced with two different stocks you can buy, Google and Google. Same name, slightly different ticker symbol, and they do have a slight difference between them. So the question is, which one should you be picking? That's exactly what I'm going to show you in this video so that you clearly understand what is the difference and which one should be your pick. Right, and essentially we talk about the difference between GOOG and GOOGL. And as you can see over here, there's really one main difference. And that's that one, the GOOGL, called Class A. And you as a shareholder who has these shares can technically vote, shareholder votings, etc. While the GOOG, or also known as Class C share type, does not have voting rights. So the question is, of course, whether that is important for you or not. Now, personally, I've never voted in my life before for any company that I'm holding. But if I did wanted to, then obviously I could only do that through GOOGL holding. So that's the first main differentiation between the two. And of course, we need to remind ourselves that Google is not actually the company. It's Alphabet, the stock company that we're buying, is the holding company that has all those other companies underneath, like YouTube, Google, and all these various business ventures of Google all fall under the holding company of Alphabet. So when you buy either of the stock ticker, you're actually participating in Alphabet that kind of owns all of these and probably even more in the future. So that's also something to keep in mind. It's not just Google, the search engine, but you get all these other benefits with it when you buy Alphabet. I know it can be a little bit confusing. You buy Google stock, but then you have Alphabet, but basically they're essentially the same. It's just a ticker symbol called Google to denominate Alphabet, the holding company that you would be acquiring. And in the past, they only had one stock, which was the A class. However, the founders, they had a dilemma because they wanted to keep on raising more money, but they didn't want to dilute voting power and give that away. So that's why they created a new class of non-voting shares called the Class C type, and therefore they could issue more of those shares, raise more money without diluting voting power. So that was the smart move they did back in 2014. Now, in terms of price, they're pretty much priced exactly the same. If I jump over here, for example, on Trading 212, or you can check any stockbroker of your choice, you usually will find both of them being listed on your broker. So if I go over here and just look up Google, you will see, obviously, one second, if I type it in here, I have Alphabet Class A and Alphabet Class C. You can see the ticker symbol, one is GOOG, one is GOOGL. We spoke about it just now. And the price, it's very similar, slight difference. So the one with voting is actually slightly cheaper priced, but again, at the same time, price is not everything that matters, right? It's also shares and circulation. So don't only look at the price thinking that it's cheaper. Historically, they have moved pretty much in parallel in terms of total price return. You can see over here on Seeking Alpha, where I compared GOOGL to GOOG. And yeah, it's pretty much exactly the same. That follows the same trend line because ultimately they have the same underlying assets, right? Which is Alphabet. So they pretty much move exactly the same. And both of them are being listed over here on the NASDAQ. So they're also on the same stock exchange. By the way, I just noticed that Trading 212 actually brought some really nice updates to their search, for example, that you can see right away the price, the exchange, which a lot of brokers make it so difficult to know on which exchange you're buying something, right? You can look up anything. If you wanted to buy Tesla, for example, you see all the various options, which currency. Really love that. That was not there previously. And things like AI analysis, where they can use AI to analyze a stock, even your own portfolio. So really cool updates. Let me know in the comments down below if you would like me to do an updated tutorial and a review of Trading 212. I think could be interesting. And also, if you don't have a Trading 212 account yet, then definitely use my link down in the description below and you get a free share valued up to 100 euros. So definitely check it out. And if you signed up already, you can use the code KAI inside the app under promotion to claim your free share. So the question is, why would I then go for one or the other? What's the difference, right? If I want the voting rights or not, if that's important, then it's pretty clear. Then go with Class A. If you don't need the voting rights, you could consider both of them. But for me, also one thing that is not being discussed very often is the traded volume. You want a stock that is traded most frequently, right? The more frequent a stock is traded, usually you get better prices, lower spreads. The difference between the bid and ask price means you get a better purchasing price than if a stock is hardly ever traded. So both of them obviously are frequently traded, but one slightly more than the other. Let me show you what I mean. Jumping over to eToro, where I'm actually currently buying right now my Alphabet holdings. So go over here and type Google. And then once again, you have the two options over here, GOOGL and GOOG. Let's start off with the Google one without voting rights. So if I go into here, you will see the volume is 27 million. Now, that may not tell you a lot. Just keep that number in mind. If I now go over to GOOGL with voting rights, you will see the volume is definitely more at 40.5 million. So that's the average number of shares traded per day over the last 3 months. So huge number when you think about this. And while both of them do trade a lot, as you can see from here, I personally just want to go with the one that's mostly traded, right? So if most people trade GOOGL, and pretty much the same price, if not slightly cheaper even, right? Then why wouldn't I go with this? Plus I get the voting rights as a benefit on top. And well, that's why I personally went with this. Again, both of them are great options. There's no wrong or right. But if in doubt, I would recommend you go with GOOGL. You get the voting rights. It's more frequently traded and generally slightly lower price point if that's important to you. But again, ultimately your portfolio, if you invest $1,000, $10,000, whatever it is, will move pretty much exactly the same with either of the stocks. So it's just a personal preference. But in my case, I like to have the option of having voting rights if ever one day I would like to exercise them. And of course, knowing that it's a really highly traded and liquid stock as such. So if I jump over to my portfolio on eToro over here, you can see my holding. And yeah, most recently, my smallest position for now is the one I added recently, which is Google, down almost $20. But hey, I'm a long-term investor because I really find them fairly priced right now. So I want to, establish a long-term position with them. But again, this is not financial advice. Obviously, I'm not recommending you to buy it. It's just my personal decision to do so. If I go into this, you can see I had 2 buys recently that are done at different price points. And that's really nice. You can see that on eToro, how each of them has performed. And sadly, since I bought, they slightly dropped. But once again, I invest for a couple of years. So long-term, I really think they will continue to grow my position and returns as such. So I hope I made this point clear. Ultimately, a lot of people have questions about it, but I do believe once you understand it once and you had your position opened once, you will just keep on adding to it, right? So even if, in a few months or years you forget about this, once you have that position that you opened once in your portfolio, you'll just keep on buying more of it. You don't have to every time go into it and look it up and remember which one I have to go with, because actually there's also a third share class, which is called the B class, but that's only for founders. These are not traded on the open market like NASDAQ or other stock exchanges. These are only for founders. So technically there are 3 share classes, but you have the choice between A and C. And personally, I'll continue investing more into the A class, which will also give me the voting rights. Hope you enjoyed the video. If you did, give it a like, subscribe to the channel. Helps out a lot. Next up, check out this video over here. As always, thanks a lot for watching. Stay healthy, get wealthy. To see you in the next one. Ciao.